Okay, we are live. We're ready to go with this quick little recap today. Cool. Okay, so I am a little late on the recap. I was working on something after trading, so it took a little while. Anyway, um, okay. Let me just. Okay, cool. So today we had some news coming in. We did have PMI coming in at 10 a.m. On top of that, overnight, I mean not overnight, but basically throughout the weekend, we also did have like the Iran news come in as well. So unsurprisingly, right at open, I was looking to be bearish. We did open up bearish on Sunday night, basically. We definitely opened below the level that we closed at on Friday. But yeah, okay. So quickly looking at this real quick, right? So let me just clear this out real quick. Bam and bam. Okay. So at open, I was leaning to be bearish, right? So just quickly recapping once again we did have the PMI news coming at 10. Quickly seeing this. Yep, 10 a.m. news, 10 a.m. PMI news came in. And today I took one loss and then I took one win. So I took two trades today. Okay. So just off bat, my bias at open was bearish. I was looking to want to look for sells only because really the 4 hour was bearish. Obviously excluding this candle right here, the 4 hour was bearish, and we had very obvious sell side liquidity sitting down here, right? Very obvious sell side liquidity sitting down here. So I was looking for us to chill down to that level and sweep a liquidity, right? The only thing I did see initially that I didn't really like, well, I pay attention to it, but I didn't really like prioritize it at the moment was this SMT that we had in play right here, right? We had an SMT here between this internal low down here on the S&P and on NASDAQ. We took it out on the S&P, we did not on NASDAQ, right? So I had that in mind, but either way, the higher time frame was telling me we were looking for sells, right? Right, so we were looking for sells. On top of that, we had this new week opening gap right here in play. New week opening gap right here, right? So look, zooming in a little bit more on the 1 hour here, right? Yes, we had an SMT at the bottom, but because we also had this new week opening gap and I wanted to just push away from the gap towards sell side liquidity, that was my idea on the day. All things considered, that was my idea, correct? So once again, we do have this new week opening gap. At open, we filled in the gap a little bit and then we begin to trail back down. Once again, this was around open. Open was around here, give or take. This candle right here. Why is it still this color? Sorry. Hold up. There you go. 9:30 open was around here. And once again, before that happened, I was looking for us to keep on pushing back down. That was my idea at open. But obviously, instead, what we get is this huge spike up, right? As we can see off that, right? So let me now zoom in and actually like look at this a little closer in, right? So I was looking for sells, but very obviously here we not only respect bullish gaps right here, but we are disrespecting bearish gaps right here, right? Nice long strong wick from the displacement of this SMT that's actually in play. So once we got that inversion and 10 a.m. news came in, my bias was flipped towards bias. 1 hour inversion, we're respecting bullish gaps, respecting bearish gaps, and we're obviously trailing upwards. What nice expansion like here, right? So at 10 a.m., at around 10 a.m., I'm looking for buys now, correct? Now let me actually zoom in on this, right? So 15-minute. Okay, cool. So sorry. Let's go to replay. All right, so let's go to around 10 a.m., right? Because at this point, I'm looking for longs, correct? I'm looking for longs because I essentially confirmed we're looking to take longs here, right? Very bullish leg, displacing through the FVGs, the bearish FVGs, respecting bullish gaps, and most importantly, which was really the draw, was the fact that we had this new week opening gap right here, right? So we have new week opening gap high, right? We have new week opening gap high here, and then when you have new week opening gap low all the way down here, right? So we already filled in a new week opening gap low down here. But one thing about new week opening gaps is that we oftentimes like to fill in the whole gap, right? From top to bottom, the whole gap gets filled, okay? Which was a great draw on liquidity, correct? Another draw on liquidity we had was Asia highs right above here, correct? But really, my most strongest draw was the new week opening gap high, which is right up here, correct? Once again, 9:30 open, bearish. After that, we displaced up higher. 10 a.m. hits, 10 a.m. news hits, and we close bullish, right? I'm pretty much looking for buys at this point, correct? Cool. Okay, so I'm looking for longs here. Yes. 5 minute. I'm looking at this to see. Okay, listen. If I'm looking for longs now, right? Realistically speaking, what I want to see is most likely a retracement back to a 5 or 15-minute gap, right? So once again, at this point, it is 10 a.m. Correct? It's 10 a.m. We have a 15-minute, sorry, a 5-minute. We have a 5-minute gap right here. Sorry, wrong one. We have a 5-minute gap right here. And we also are currently trying to form a 15-minute right here. Actually, no, we formed it here already. My bad, my bad. So we have a 15-minute right here. I don't know why it does that a lot, but basically this. Okay. So let me just go back a little bit more. Once again, replay back to this point right here, right? So let's go zoom in a little bit. Once again, we're displacing higher at around 10 a.m., which is not yet. We close very bullish. My first target is Asia high, and obviously I want to target new week opening gap, right? So initially I'm looking for this 5-minute to get tapped into, but in the process of us trying to tap into this 5-minute, we end up actually forming a 15-minute right here. We form this 15-minute gap right here and we tap into it, correct? I'm now looking for 5 minutes confirmation for us to take these longs. If we're looking to take longs, we want to break above or push higher or give some form of confirmation there. Listen, we're ready to go push up away from this 15-minute gap, right? So yes, we tap into this Asia high, correct? But that's one of the first targets. My real target is new week opening gap high, right? So here I'm just observing, correct? I'm observing, letting this run do its thing, right? I want to see some form of confirmation of some type, right? I haven't got any confirmation, not a CISD, not a breakup structure, not a inverse value gap. 5-minute, nothing so far, correct? So I'm waiting. Boom. So here, not only do we get a 5-minute CISD, right here, but we also get a 5-minute BOS right here, right? This to me is enough to say, hey, listen, we're done tapping into this 15-minute gap. We're ready to push up higher and reach towards new week opening gap high, okay? So this is when I zoom in on the 1 minute, right? So now I'm keeping track of the 1 minute to see what it does, right? So far, there's nothing. The only thing that really interests me would be this 1 minute gap right here, which we respected previously, correct? So I'm waiting for maybe to us to retrace to that point, right? We just kind of keep on doing our thing here. While we push towards new week opening gap high on NASDAQ, as you can see here, this is the new week opening gap on the S&P. We tap into the new week opening gap high on the S&P. The only thing is that I really like when we fill in a gap, and more often than not, we'll see that NASDAQ / S&P wants to fill in the gap, right? Also, we're so close to filling the gap that this is basically like, it's like looking at equal highs, basically, pretty much, or fairly equal highs. We're so close to tapping into it. We failed to tap into it. Yes, we do on the S&P, but I'm still looking for longs, right? Nothing's telling me we're looking for sells here just yet, correct? On top of that, we do have also this very nice 5-minute FVG right here, which is a great retracement point looking for longs, correct? Cool. So on top of the 5-minute gap, which is really what I'm looking for us to retrace, because we already have an S&P in play, right? An SMT in play. So I want to see us retrace back down to the 5-minute gap and then expand back up to take out new week opening gap high, correct? Also, this sits perfectly, the 5-minute gap sits perfectly around equilibrium of the move. So I want to see us tap into equilibrium of the expansion from the 15-minute gap and and tap into the 5-minute FVG. So that's essentially what I'm waiting for, okay? And then my goal is new week opening gap high, correct? So I wait this out, see what happens, right? We wait this out, waiting, boom. Eventually, we tap into the 5-minute gap. We tap into the 5-minute gap, tap into equilibrium, and then as you guys can see, we have this beautiful expansion leg right here, right? Beautiful expansion leg right here, correct? We have this FVG, which essentially turns out to be an IFVG. I like this expansion so much. This is where I took my first entry, right? Because why? We tap not only into a 5-minute gap, but we also tap into equilibrium of the move, and we left new week opening gap high still fully intact, right? So this is my draw, and this is where I take my first entry. So I place my entry at the IFVG at the low, targeting the new week opening gap high, right? So I create a limit order here. I believe I go in with 6 contracts here, right? So I then let this play out. We inverse it. I'm looking for us to dip back in here. We take an entry at the retracement to this IFVG. We then begin to kind of wiggle around a little bit. I was thinking to myself a little bit, should I go break even at these relative equal highs we left behind? Right now, I'm beginning to look back and think maybe I should have gone break even at that point, given that we should have really pushed away from the zone and not have wanted to retrace back outside of it. But because we had a 1-minute BPR gap in here, I give it a little more thought. I'm thinking maybe we're trying to maybe we want to, what do you call it? Maybe we want to you know, retrace into this BPR gap and respect that BPR, and then from there expand. So I didn't really go break even at that point. Maybe I could have considered going break even there. So I let this play out, right? But let me up my stop loss. So my stop loss is down here at this low, and then my take profit is up here at this high, right? Quick little 1.26 RR, right? So I'll let this run, right? And eventually we get stopped out, right? I took my loss for 400 something bucks, right? Cool. I'm looking for another entry because I do believe we're still trying to take out this new week opening gap high because it's a great draw on liquidity as a whole, right? So here I'm waiting is out, seeing what do we do. I made 2 mistakes here. So here, as you can see, we inverse this 5-minute gap right here. Give it a minute here. So let me let it play out. Hold on. What is it? Give me a second. Give me a second. Give me a second. It's right here. Cool. Okay. So once again, this is playing out. We get stopped out, and then this keeps on doing its thing. Like bar back here. Not the 5-minute, 1 minute. This keeps on playing out. Eventually, we inverse is 5 minutes. But I took that inversion as if we were trying to go back down. Because in part, my mind was thinking, okay, we inverse is 5 minutes. I'm thinking maybe the S&P wants to come back down to this unmitigated 15-minute we left behind, right? But that was the wrong way to go about it, right? What ended up happening, okay? What ended up happening here is that, yes, we inverse the 5-minute gap, correct? That gap got inversed. But if we look back into the 30-second, right? And on top of that, Fibonacci. So this is the low that's up at the 15-minute. We expand it, right? Once again, I was pretty much not even looking for entries here at this point, right? I let this play out. Eventually, I observed how the 5-minute expanded super nicely here, and it caught my eye. So I zoom in on the smaller time frames, right? And I didn't see this initially, but we have this, we not only retrace into Fibonacci, which is 0.6 to 0.7 of the range, right? But we have this very small yet significant 30-second IFVG holding bullish pressure. Small 30-second IFVG holding bullish pressure in confluence with the 0.6 to 0.7 range of Fibonacci retracement point, right? And as we see this play out, we get a beautiful breaker block form right here, right? So from this low right here to this high, this block right here forms because we break above this high, low, high, lower, low, high. We break above this high, and we have this breaker block form right here very beautifully. I don't see this initially, right? So just keep it in mind. This would have been a great entry had I noticed it previously, right? Entry at the breaker, at the low, targeting new week opening gap, right? And my break even probably would have been this obvious swing high right here, right? What I ended up doing is, because I didn't notice this breaker, and by the time I noticed this had already happened, I was looking to take an entry at a 30-second IFVG right here, because the 1 minute wasn't showing anything. All we had was this 30-second stack of FVGs right here in play, right? So I let this play out. See, break even would have been tapped had I taken an entry at the trace back into the breaker block, which doesn't matter at this point. But here I'm waiting for this IFVG to get inverse. We do. We inverse this FVG. So this 30-second FVG gets inverse. I then look to take an entry at the inverse FVG to the low to new week opening gap high for a 1-on-1 RR. Okay, so I'll then let this play out. My break even point would have been up here, right? Was up here. I let this play out. We trace back into my entry. Small little tap, small little wick into the 30-second IFVG, right? Then this kind of does this thing. I go break even at this point up here. Matter of fact, I should have hold on, let's go back again. Boop boop. Right. Let me actually go with an entry. So create limit order. I believe I went with 4 contracts here. So yeah, buy. So once again, let this play out. I took an entry here. Stop loss at my low right here. Take profit at the new week opening gap high up here. Right. I would have gone break even at this little wick right here we had. So we would have gone break even around here. Confirm. And once again, let this play out. That's the thing. Eventually we, boom, tap into the new week opening gap high. And right after that, we reject right back down. But also, another thing to keep in mind is that this breaker block right here was very, very good. Breaker block right here was in play was a great confluence here, right? Beautiful 30-second IFVG holding, low, high, lower, low, expansion. So now not only they've had a breaker block in form, a 30-second breaker, a 30-second IFVG was holding bullish order flow, and we had Fibonacci being respected as well. Then we have additional confluence with, down the line with IFVG being respected right here. I mean, disrespected right here. IFVG being disrespected right here, forming an inverse value gap, and we begin to deliver higher. Had I noticed this before and not just discarded the whole idea entirely, I could have taken an entry at the breaker block right here, breaking even at this level right here, and we never would have gone break even anyway, and this would have been a 2.45 RR trade. Maybe taking partials at the high up here, possibly, but the new week opening gap high fill was going to be my target at the end of the day. So this trade right here was honestly pretty good. Honestly, it was more than good. These were both A+ setup trades. I just discarded the whole idea because of the 5-minute inversion. Which was definitely my fault. But I chose not to look into it a little bit further. I'm glad that I saw the expansion and I got curious, so I zoomed in the 1 minute 30-second and I saw this play out. By the time I noticed it, we were around here trying to inverse these 30 seconds. So that's where I took my entry for a quick little 1-on-1 RR. So what should have been about a $450 loss today only was I believe a $60 loss. So technically I am red on the month. I mean, not a month. Technically so far, yes, because it's March, but I am technically red on the day. But listen, a big loss could have been way, way worse. And honestly, these were two really A+ setups. I'm not mad at this trade up here. Once again, we had a very nice expansion. Like this expansion right here on the 1 minute. This was a beautiful expansion. Like this rejection from equilibrium and from the 5-minute gap was just great right here. But we ended up retracing a little lower, tapping into the 30-second IFVG, and then we expanded, which was fine. But also, this is a little bit of help trying to figure out whether I should do 1 trade per day, maybe 2 trades per day. I'm trying to figure out level that out entirely. But this was A+, right? And this was A+ too. Beautiful breaker, beautiful IFVG, beautiful Fibonacci retracement as well. And obviously, great draw on liquidity up here with this high, obviously, and then the new week opening gap high as well. Correct? So, once again, 2 A+ setups today. I am technically down on the day, but listen, once again, I'm fine with that. $60 as opposed to like $460. I'm cool. So hopefully tomorrow we get some decent trades as well going on. Tomorrow's Tuesday, so it should be better. And yeah, So that'll be it for today, and deuces.